Unlike the previous two episodes where the couch investing portfolio did outperform the S&P 500 by a little bit, last week was another disaster of a week, especially towards the second half of the week after Fed speak, after oil prices went up, and especially with the drama around Tesla, which is the number one position in the portfolio. Huge underperformance by this portfolio, down close to 3%, while the S&P 500 was down 0.71%. Overall, since the start of this challenge, the portfolio is down 2.92%, while the S&P 500 is up 4.36%. I did not start this at the start of the year. I started this mid-February. Now, yes, currently at the time of making this video, it's Monday. I forgot to film it on Sunday, but the performance that you can see here is still calculating only up until last week's. So there's no positive benefit of the today's performance, which currently we're up 1.18%. Great, which means that we are now a bit higher than the number you're seeing in the thumbnail. But overall, as you can see, lots of red. Too much red in my opinion. But even with all of the red that you're seeing here, this is the total distribution and positioning allocation of the portfolio, performance of each and every stock that I own in that portfolio. Even with all of the red here, we're only down 2.92%. And yes, I know many of you will say, yeah, but markets are at all-time highs. How are you underperforming like this? Remember, I started this mid-February, and I also picked out quite a lot of stocks that have not really reached anywhere near their all-time highs. I mean, if you see, I have Tesla, PayPal, SoFi, Alphabet, Adobe in my top 5 of this portfolio. Then after that, we have Snowflake. Lululemon is actually a stock I bought last week. Yes, jumped in maybe a bit too soon, but hey, I'll explain in a second why I did that. Then I've got Intel, Palantir starter position here, Apple, dLocal, and then 3 small bets here, Funko, Appcelera, and Rocket Labs. These are basically hits or misses. If it hits, huge gains. If it misses, then it goes to zero, and well, it shouldn't really have such a huge impact on the overall performance of the portfolio. And of course, with earnings season starting off quite soon, expect the portfolio to be extremely volatile for at least the next month and a half or so, as most of those companies will have reported their earnings report by the end of May. Now I'll go over the performance one by one. If you enjoy this type of videos, do leave it a thumbs up, subscribe if not. We're well on our way to reach 40,000 subscribers. So thank you very much for all the support. Yes, I know right now this challenge is quite challenging because of the companies that I've chosen in that portfolio, but I'm not a short-term investor. I'm not a trader, even though I did make some short-term trades here. But over the long run, I'll still expect this portfolio to outperform by quite a lot. If you want to go on that same journey with me, it's free. Nothing here is behind a paywall. So the best thing you can do is like and subscribe to this channel. It's the best way to support me. And then, of course, if you want to support me more, you can check out the links down in the description below. Lots of discounts there on every offering. All right, so let's start off with Rocket Lab here. A big underperformance, currently down close to 12% of my position. Average cost per share is at $4.32. Maybe I'll add a little bit more in the coming days. For Rocket Lab, it's pretty simple. If it works out, if they can ramp up Electron, if they can ramp up Neutron, I think this will be worth way more than the price it's at right now. I'm not comparing it to SpaceX or anything like that, because SpaceX is in a league of their own. But Rocket Lab, I do think that it's a bet worth making, especially if you're interested in the space industry. So I made my bet, not such a big one, but if it works out, it's probably going to be a huge multi-bagger. But currently, I'm down close to 12%. Then, with regards to Appcelera, also quite a small position. I'm down 10% on that. This is also a bet for the future. It's a hit or a miss. Here, if it hits, it will hit quite big. I explained Appcelera in 2 videos already on the channel, so I'm not going to repeat the whole thesis again and again. That video will probably be in the top right corner, or just search Appcelera on the channel. But yes, in the short term, don't expect anything meaningfully from Appcelera. They're still working and building their manufacturing sites. They're still building up their own, say, ecosystem business model. So yes, in the coming quarters, you've probably seen the last quarter already, right? Revenue, huge decline year over year. It's because right now there are some cycles there. Should be way better, way more diversified in the future. So you're not going to have those huge up and down cycles in years and years to come. Then with regards to Funko, Funko is the company that makes Funko Pops, vinyl pops, these small collectibles that you can find. I have some here at my house. You probably have some at yours as well. Funko I bought because I thought this is way too cheap right now. Yes, last week it got hit quite hard after Fed speaks, but in my opinion, at $6.29, at $6.21, not such a big part of the portfolio. This is more of a short-term rebound play than a long-term play. So let's wait and see when that rebound will happen. But right now, struggling here, down 6.44%. Fully expect to make some money on that. As for the local are in green here, up 9.17%. Average price per share is at $15. I bought the local because one, I trust the new management. I trust Pedro Arndt, which was the previous CFO of Mercado Libre, now the CEO of the local. It's a company that is growing extremely fast and is already profitable. Yes, right now they are taking short-term hits on profitability, just like we've seen with Adyen, which is why the stock got hit a little bit after the earnings report. But overall, I do fully expect that company to become a huge, huge winner for me. Still a small position in the overall portfolio because this is just a starter position, but overall, I'm quite happy with the performance of the stock and the business. As for Apple, currently I'm down 5.66%. This is supposed to be a semi-cash position because of the buybacks, of the dividends. And in my opinion, now at these prices, there still is quite some upside, in my opinion, with the upcoming, let's say, refresh cycle with their devices that are going to be marketed as AI devices, AI ecosystem, stuff like that. Yes, my average cost is at $178, close to $179. I'm now down 5.63%. So yes, my timing could have been better, but again, I don't have a crystal ball, so I'll take what I can get, but I'm purely using this as a semi-cash position. Then with regards to Palantir, in this specific portfolio, I only added Palantir, I believe, last week or so. Of course, my timing here again, impeccable, $24.33, so I'm already down 5.31%. I bought a couple of hours later, there was a bearish report, which took the stock down a little bit, but overall, you know my thesis on Palantir. I do believe that commercial and especially government will continue to reaccelerate, which means revenue growth should accelerate by quite a lot. Currently, the expectations are only 20% growth. I think we should be getting closer, if not over 30%. And then since this is a high margin business, it will flow down to earnings and free cash flow. I will add here accordingly. As for Intel, this is my only chip play. I'm down now 9.42% after the big hit from last week. They basically provided an update with regards to the foundry business. They're losing billions and billions of dollars in that business right now, but they provided their roadmap towards 2030, their goals. I covered that on the channel as well. Yes, the stock takes a hit in the short term. Also on the technical basis, we're now under a support line, which isn't great. So let's see how much lower this will go. And again, earnings will happen in the coming weeks. So let's see if guidance becomes a bit better in the second half of this year, because we know that Q1 is probably going to be quite weak. Then as for Lululemon, Lululemon is the newest addition to this portfolio. Maybe I could have timed it better, but again, I don't have a crystal ball. I'm down 5.31%. I have an average cost here of $379. Now, with regards to Lululemon, I made a video about that also, I think, last week. Talked about how this is still a fast-growing company with great margins and a dominant player in their own field. The stock took a huge hit, as you can see here, after the earnings report. I added, should have waited a day or two extra, would have been a bit cheaper, but okay, we live and we learn. Now, with regards to Lululemon, the timing here, it's basically because of this. I looked at the graph on the daily, which again, I should have mixed daily with weekly, but okay, I'm not a technical genius here, so I'm always learning. I saw that it closed the gap here that was back in October of 2023. So I was like, you know what? Now that it closed that gap, it's worth opening a small position. Of course, I should have also looked at the weekly. By the way, on the daily, it's heavily oversold. If we look at the weekly, on the weekly, yes, 380 or so could have been a support line, didn't really hold up. I should have had a little bit more patience. Now, what we can see is that maybe now at 360, That's a better support line. We are starting the week here a bit green. Again, could go lower, could form a support here. RSI is extremely low, but on the weekly, just not oversold yet. Yes, the timing could have been better. Up next is Snowflake. Now Snowflake, I know, why is Snowflake higher than Palantir here? Well, that's just because Snowflake took a major hit after the earnings report. And I do think that it was sandbagged. I do think that they want the new CO to perform quite well. So yes, it is now a bit bigger than Palantir, but like I said, this is going to be a short to medium term trade because of the big hit that it got after the earnings report. I'm down 9.76%, average cost $170. Yes, it's now at $153 here also. Could have had a little bit more patience after the earnings report and added accordingly. So right now I'm down 9.77%. I do still think that this is a fast growing company that will perform quite well this year. Specifically with regards to Snowflake, we've got a positive note from Rosenblatt. So we recently attended a customer event in Toronto, along with several hundred regional customers, partners, and prospects who are considering moving to Snowflake. We came away from the presentation and our customer discussions encouraged that while we expect revenue growth to be slower this year, expecting 22% in fiscal year 25 versus 36% last year, broad-based customer interest in the Snowflake platform and the expanding ecosystem around the company remain very healthy, giving the post-Q4 results weakness in the stock and 22% implied return to our $185 12-month price target. We are taking this opportunity to upgrade Snowflake to a buy. We also had another comment here. Snowflake data event shows still in early day of migration to cloud. An analyst here at Bird said, with current investor sentiment more negative, we believe the potential for upside to current estimates and an improving generative AI narrative through the year creates an attractive entry point. The analyst here has an outperform rating and 210 price target on the stock. Now, from the comment from Rosenblatt, you might make the comparison with a bootcamp that Palantir is doing, and yes, it's pretty similar to that. Now, there have been some comments on Snowflake's AI business from Databricks, huge company, huge competitor as well, saying that Snowflake shouldn't really be regarded as an AI play. The punches have been thrown. Moving on to the top 5. That's Adobe here. Again, I bought Adobe after the hit with regards to Sora and after the earnings hit as well. I still think that with their ecosystem, with their distribution, they are one of the best plays in the creator economy, even with the rise of AI. I think that Adobe is well positioned to launch their own, and already do, launch their own AI tools to the masses. Currently down 6.78%. The company is growing, highly profitable, doing lots of buybacks as well. And I do think that AI is going to be a tailwind for them and not a headwind. Again, I talked about Adobe on the channel in a specific video if you want to watch that. Moving on to the largest company in the portfolio, which is currently Alphabet. I bought Alphabet at $138.8, so I'm up 11.48%. I bought it because I did think that there was just too much noise with regards to Gemini, with regards to AI, Alphabet being behind, etc., etc. I made a couple of videos about that, and right now, I guess the market has switched their sentiment towards this dying big company, right? There was also this news that came out last week. Alphabet reportedly considers putting AI search behind paywall. This is one way for them, I guess, to increase revenue for their AI search by also not cannibalizing their current business model. And if people were to use the new AI search, at least they're making money on that and not losing money from the traditional search business model. Moving on to the top 3, one is SoFi. SoFi, I'm just down 1.11% at this point. With SoFi, we've had highs, we've had lows, then suddenly last week, the sentiment has switched, some positive comments with regards to the company, and suddenly the stock went back up. It's a very, very interesting thing. Again, in the coming weeks, we're going to have probably another beat and raise of an earnings report, and then we're going to have the pump after the earnings report and the dump 2 days later, unless something changes this time. Remains to be seen, but so far I'm highly positive on that company. It's number 3 in that portfolio, and I'm only down 1.11%. I think there is quite a lot of upside there. As for PayPal, PayPal is the second largest position in the portfolio, up 12% right now. I made a video earlier today about PayPal and Alibaba. If you haven't watched that, go watch it after this video. With PayPal, my opinion, still one of the best, if not the best, risk reward in the market currently. I expect to see an acceleration in growth and profitability while the company still buys billions of dollars worth of their own shares at depleted prices. Me as a shareholder, long-term shareholder in PayPal, I think I'm going to be quite happy with the future returns. Of course, execution is key. Then, the number one stock in the portfolio, the most painful one, although I'm only down 4.5% currently, it's Tesla. I think with Tesla, the biggest hit is yet to come, in my opinion, with the earnings report, unless of course they come out with some new information that they've never given us before. For example, take rate with FSD has increased meaningfully. I think that will propel the stock quite higher, or at least make sure that the hit on the earnings miss and maybe potential guidance, because this year we don't really have real guidance, maybe that will be enough to satisfy the market. Again, with Tesla, I've talked about it quite a lot last week. I still think that there are lots of questions without answers, and hopefully during the earnings call, we get more answers than questions. It remains to be seen. With Tesla, this is an extremely long play. Yes, right now, the majority of its revenue is coming from selling cars. In the future, I expect the mix to be way better than just cars. It's going to be services, insurance, FSD, robotaxi, energy side of the business, robots, etc., etc. This won't happen tomorrow, next month, next quarter, next year, but it will probably happen in the years ahead. Yes, there are still some questions with regards to Elon Musk. The compensation package, that's definitely something to keep an eye on. So overall, that's about it. Those are the worst performing stocks in the portfolio and some of the best performing as well. Right now, the portfolio is underwater, but I fully expect it to perform quite well in the coming years. Of course, do share your thoughts down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.